All right. Welcome back to the channel to everyone out there on YouTube. This is Future Trading with Mike. I appreciate you watching today's video because I've got a great topic at hand, and more so just some great information that I want to share with you here on the channel. Because I want to be able to provide as much clarification and confirmation as well when it comes to trading supply and demand, okay? So I'm trying to give you the best tools that you can actually use in your own trading that will help you out to give you better means of confluence. And I want to talk about liquidity and smart money concepts because we all know who drives the market, and that is the banks and the institutions. And we as retail traders want to do what? Trade like them. So let's talk a little bit about smart money concepts. You know, primarily, what can we look for, okay, in the markets, and how can we trade around it? You know, when we see certain setups or moves taking place in the markets, and the market shifting and moving one way to the other, you know, one way, and then moving and turning and moving in a different direction. Because we all know the market can do what? It can shift or make structure shifts in the market at any given time, basically reversals, and then, you know, want to move in a different direction, okay? But the first and foremost key that I want to tell you that would definitely help you in your own personal trading is follow the flow or the structure of the market on a higher time frame. I say this specifically for new traders and basically to all traders in a sense. It doesn't really matter what market you trade. Here on this channel, we do trade futures, but you know, this strategy of trading supply and demand and being able to follow smart money concepts and being able to trade like the big boys, the institutions, the banks, we want to trade with them, not against them. I always say that in videos, okay? Because do not think that you're a competitor. Don't think you're as a, you know, the big boys as a means of defenders in the market or whatever the case is. We want to be able to grab their coattail and ride with them, all right? So I want to talk about a couple of things that you should, to me, look for. And that is, number one, the structure of the market, okay? So if on a higher time frame, we are making higher highs and higher lows, okay? And you see the market just moving or trending in one direction, you want to be able to look for things on a lower time frame chart and take directional moves in the same direction as the higher time frame. Now, you may be asking, is there times where you can trade, you know, opposite or against the higher time frame? Yes, if you have more experience, you know, you can definitely do so. I do it on a daily basis. It's called counter trend trading. But you must understand those moves that actually, if you're counter trend trading, may not be as impactful or as strong, you know, meaning that they may not be as powerful and move for a long period of time. You know, they may be short-lived. So that's why if you're someone that's really trying to grasp a greater means of confluence and be able to move in the same direction, I highly recommend that you pair a higher time frame and a lower time frame, moving both in the same direction. So without further, you know, ado, let's talk about what I want to discuss today. First and foremost, look at market structure. Allow it to tell you which way the market is, you know, moving and being able to trade with it. Now, anyone can do that, okay? And what I want to show you here, just an example, all right? Please, you know, forgive me and don't pay attention to all these little boxes and areas that I have here on the charts, okay? But if we look at the overall market right here, right, what we see, the market's making higher highs and higher lows. Yes, it does have significant pullbacks, okay? Like right here, boom, major pullback, major low before pushing to the upside here, right? Okay, but if I look back prior to that, what I see here is the market making higher highs and higher lows. This is off of my my lower time frame, my 12 range, which is more so my entry chart. But in looking at this, I can still trade purely from my lower time frame chart as long as I'm moving in the direction or taking trades in the direction of the higher, of my lower time frame chart. So, you know, if the market is moving to the upside, say for instance, making higher highs and higher lows, I primarily do not want to be trading against the lower time frame for sure. Okay, so if it's shifting to the upside and we see structure moving to the upside, making higher highs and higher lows, then look for setups based around, you know, smart money and what's unfolding in the market, and take those directional moves. So let's talk about it right now. Now, what we see, as I just mentioned, we're making higher highs and higher lows on the higher time frame. Now, take a look here on this pullback right here. Okay, again, just do away, don't picture, don't imagine as if the information here was going. I should have erased it off my charts. But what I'm trying to show you is you want to look for areas where there's primarily key areas of support and resistance in a sense. Now, I don't trade, you know, support and resistance I primarily trade supply and demand where the aggressive buying or selling takes place. But what I'm trying to show you is get you to understand where there are plays in the market, okay? Meaning setups, where the institutions, the banks are making plays in the market so you can follow and trade with them, okay? Because what they're doing is they're setting up plays in the market, okay, to where there's liquidity areas to where they're going to take out those areas and then they're going to turn the market in the opposite direction. So what they're doing is they're creating areas of liquidity within the market and they're going to take it out just to create new areas of liquidity so that traders can trade, okay, and move in the same direction, okay? So take a look here. What I'm going to show you here is where the price is moving to the downside, making lower lows and lower highs. But must understand and looking at the higher, the bigger picture, we're making higher highs and higher lows, all right? All right? We have a low here and then price moves higher. So we're kind of moving stagnant and in the middle right here. But what I want to show you is this just key example, and we're going to look at a few other examples. Right here, what we see is the market making lower lows and lower highs. But look, it's creating a major area of support right here, all right? Okay? So think about this. It's making equal lows here. If it's making equal lows in this example right here, it's creating multiple areas of liquidity. Price came down, made a low here, okay? Pull back, another low. Pushes up, another low. Pushes up, and then it finally breaks to the downside. What does it do? It takes out this area of liquidity right here. So my first thing that I want to see, okay, and this is, how you can trade based upon smart money concepts, meaning areas of liquidity that are created in the market that are taken out, and then you have to think about what's going to happen or take place next. That's why I was trying to talk to you about at the beginning of the video is that once we see this play unfold, okay, we need to be able to understand which direction we're trying to trade, okay? In this case here, because we are breaking liquidity to the downside, okay, meaning breaking through a major area of support in this case here and taking out multiple areas of liquidity. When price turns around and we're looking for a structure break back to the upside, okay, once price breaks structure, we're going to be looking for a pullback to a key area of demand, okay? Now, these are powerful things, guys, powerful things that you must see unfold in the market. And it works in reverse when we see a major area of support where there are equal highs being taken out back to the upside, and then we're looking for a price to fold back to the downside and break structure and looking for a pullback, okay? So it's a step-by-step 1, 2, 3 type setup type thing, okay? One, we're looking for these equal highs to be, equal lows to be created here in this example here, because the market is trending to the upside. So when we get key areas of support or blocks that are actually created, meaning blocks of liquidity that are being created, and price breaks through those areas of liquidity, we're looking for to continue our direction to the upside and for price to break structure and then a pullback to a key area of demand. Understand that, all right? So equal highs, equal lows. In this case here, we're looking at equal lows, okay? So equal lows creating this support area. Price breaks through it, right? So the next step is to do what? We're looking for price to break structure, okay? Basically to have a market shift where the market moves to in the opposite direction now, okay? So because remember, our mind, our thought process is that in looking at the overall direction, we want to take long entries at this point, right? So the market break structure, breaks through this area of support, key area of support, where there's a lot of liquidity right here, okay? All right, turns around and starts to move back to the upside, okay? Boom, pushes up here, pulls back, breaks higher, okay? So it breaks higher, right? And this is the first means of structure that it breaks as it's moving to the upside, okay? The high, the higher low breaks higher, right? Okay? So understand that. So what we're looking for at this point here is really a pullback to a key area of demand. And this is where I kind of use my fib sometimes to kind of put me in that area, what I call that 50% area. I'm not trading off of fib levels. I'm just trying to use, sometimes I use the fib retracement as a gauge in a sense. So I'll start here from the low back up to the high here, okay, on this move or leg to the upside. Now, I like to buy below a high volume area and I also like to buy below the 50% area. Now, price pulls back, okay, it breaks through this area right here, okay, but that doesn't mean that it still can't tap into another area of demand. There's demand right here and there's demand right here. Price breaks this key area right here, all right. It comes down here, we're talking like one tick away. If it breaks to the upside, the third thing I'm looking for is what? I'm looking for a breakup candle in the opposite direction, okay? The second thing was it's the break of the structure. Price pulls back to demand right here, okay? When I get the break of the candle to the upside, I'm taking it long. Where am I going to take my trade long to? I'm aiming for the highs up here. Why? Because at this point here, this was a major area where resistance was being unfolded in the market, okay? Look, because when it started making these lower lows into the downside, lower lows and lower highs to the downside, it was creating a barrier pretty much of resistance right here, okay? Push down here, pull back, push lower, boom. Okay, equal high here. Okay, pulls back, another equal high here. So here's another, this is an area where there's equal highs resting in, okay? But again, in this case here, we're looking at demand because I'm looking to want to go long because the direction, even on the lower time frame at this case, because I'm taking my trades primarily off the 12 range. All right, now I did just say that I do recommend to use even a higher time frame chart. If you're looking at a higher time frame chart, say for me, a 60 range chart, you could be using a 60-minute chart, whatever, is your higher time frame chart, whatever that may be, okay? So just kind of, if you're using paired charts, and for example here, you want to follow in that direction of the higher time frame, whatever that may be for you. When you're scaling down to even your lower time frame, and you're looking for the setup, using, following my smart money concepts of what's going on in the market. In this case here, this is what's called a liquidity grab, the market moving in the opposite direction, breaking structure, pulling back to a key area of demand. So we're going to cover that at the end. I'll talk about the 1, 2, 3 type thing setup that we're looking for here, okay? But again, I pull the fib, we're below the 50, boom. We break down to an area of demand down here at the bottom. Break of the candle, I'm long back to the upside here to this area of resistance that price is now forming where we have equal highs at, all right? So that's the first example there, okay? First example. Again, we're looking for, based on the smart money concept rule of thumb, okay? We can trade it in comparison, but together or coupled with the whole supply and demand style, okay? Think about this. There's liquidity being formed here. One, price breaks, collects the, captures this liquidity right here, all right? That's the first step. 2, now we're looking for the break of the structure to the upside. Price break structure here back to the upside. 3, I'm looking for a key pullback to a key area of demand. Price pulls back to a key area of demand. Once I get the break of the candle to the upside, I'm long back up to the high, or at least, if you got multiple contracts riding, whatever the case is, if you want to take it out at some area of one of these small little swings here, you can, okay? But I'm aiming for this area here back up to the high because, look, this area here was an area where there was equal highs being formed here, which is a major area of resistance. So I'm going to take a play back up to the upside here, and knowing that price has tested this area once, push down, 2, push down, 3. So it wants to keep pushing back up to this area. Every time it pushes down, it wants to come back to this key area of resistance right here. So I'm going to try to take my trade back up to the key area of resistance right here. Let's look at another example, okay? Okay, so here, I want to show you, this is an area on the 26, okay? Again, this is the 12 range chart. What I notice here is that price is making higher highs and higher lows. Yes, we have a major dip right here, but then it breaks higher, okay? So it's still making higher highs and higher lows to the upside. Nice, or a significant retracement or pullback here before breaking higher, all right? And then it continues moving higher, okay? So we're still in an uptrend, okay? Even on the lower time frame, all right? Probably if we scale down to if we move up to the higher time frame, we'll still see, you probably want to see as big as a significant pullback here as you do on this lower time frame here. It won't look like that. That's great, but still we are directionally moving to the upside here, all right? And when I notice something like this, I'm looking for, a play again or a setup to where liquidity is being created in the market, okay? So a liquidity is created, is taken out just to make a power play to move in the opposite direction, okay? So take a look here. Price pushes higher, making higher highs and higher lows. Then it dips back, pulls back. It makes a low here, okay? A low here, pushes up. Another low, pushes up. Another low. So it's forming equal lows right here, okay? Then it continues pushing higher. It comes back down on the way back down, approaching these lows again, so we can consider that as well. But we've got 1, 2, 3 areas of liquidity now because we have equal lows being created here. Now, again, the first step, following smart money that is moving within the market, looking for, this is a key area of support right here, that price is getting ready to break through this area of structure, okay? Now, liquidity is being injected into the market. There's money being placed here as buyers are stepping in to take positions to the upside, okay, or to buy long, right? All right, so on each dip back, again, there is money that is being put into the market to go long, right? So liquidity here, okay? 1, 2, 3. Price folds back down on its way back down as it makes this lower high here, breaks lower, and it breaks through this key area of liquidity. So what you're looking for, guys, you're looking for major areas, say for instance, of support or resistance to where price is either making equal highs or equal lows and taking it out. It's taking out those areas of liquidity, okay? When you see what I call bands or zones of liquidity created within the market and the market takes out those areas, you've got to know and understand who's taking those areas out, okay? It's the banks and the institutions that are gearing up to make a powerful move to take out liquidity just to move it back in the same direction in which the market is flowing, okay? In this case here, I said we're trending to the upside, making higher highs and higher lows, okay? So it pushes down, it takes out this area of liquidity right here, all right? This block of liquidity that's being formed or money is rested in the market. That's the goal. That's what they want to do. They want to stop traders out and take their money just to position themselves to move the market back in the same direction. So the market takes out all this liquidity, pushes lower. Now, what are we looking for now? Basically a market shift to where there's a break of structure, moving the market back in the, basically moving the market back in the same intended direction, meaning going back up to the upside. But in this case here, because we had, the market moving, it's just on a very intermediate short-term basis down to the downside, we were looking for that break of structure or break or market shift back to the upside. So break of structure back to the upside and then a pullback to a key area of demand. Now, again, takes out the area of liquidity, boom, shifts lower. See this little area right here? It breaks higher. This little swing here is what's, now we have a directional shift back in the market, okay? You got to think with who's making these type moves. Price pushes up, okay? It pulls back, okay? Now, at this point here, you can actually get into the trade here to go long with the break of a candle. But what I'm looking for really is more room or more area for me to give me an opportunity to trade from. Here is really not a great area. You can take this trade at the break of a candle, but it's right back up to the highs where price can actually stop at. So price continues running to the upside, makes a high here, lower high, higher high, okay? It pulls back to demand again, okay? If you get the rejection again, yes, it's tested. This will be the second test here. But look, it's still considered an area of demand and price can reject those areas. It may not be as highly favorable because price is tested it once, but if we get the rejection with the candle break to the upside, I am taking that trade again. Back where? Back up to the high here, okay? Back up to this high right here. So the break of the candle to the upside, which primarily will be right here at 35, take it back up to the high, and that's where price goes back up to 42, 43 area, and then it continues running higher. Why? Because price, we are taking trades within the direction of the market where the price is making higher highs and higher lows off a smart money concept play to where price is grabbing liquidity, okay? The market's grabbing liquidity and then turning around, we get a market shift or a market structure break to the upside, pull back to a key area of demand, go long, okay? Now what you could do here, when price pulls back to the demand area here, and you got 2 or 3 contracts on, maybe take your first 2 contracts out right here and allow the last contract to continue to ride to the upside because we are moving and trending to the upside. Now let's take a look at the market here and what's actually taking place and unfolding right before our eyes today, okay? Now, the market's going to do what it wants to do, but what I'm looking at right now is an area to where if I look at the 12 range, and again, I'm just looking at the 12 range, I'm looking to see here, okay, we had a move to the upside, right? All right, market is bullish. Now, there's bearish structure being formed where the market is moving lower and breaking through, key areas of structure to the downside, making these lower lows and lower highs to the downside. Now, when we're looking at structure to the downside, we're looking, and the market is trending to the downside, we're looking for the reverse to happen. We're looking for key areas where, I guess you'd say, where resistance is being formed. What we're going to talk about, okay? A blocked area where there's resistance being formed, but a blocked area where we have equal highs, okay? Equal highs. And what I noticed as price was moving to the downside here, lower lows and lower highs, okay? It pushes down, it makes a high here. Pushes down, pulls back, makes an equal high here, okay? And then it moves lower here, okay? Another equal high here. If price takes out this area right here, okay, where I have this purple line at, this is a key area where there's resistance at, or a key area where there's equal highs at. 1, 2, 3 tests here. So if price comes up here and takes these areas here out, what do you think I'm going to be looking for, okay? And this could be just a short-term or intermediate type trade to where it doesn't play out, you know, that great or be that much of a powerful move, but still, still could be considered a high probability trade setup. Price takes out this area of liquidity that's being created here, okay? All right, breaks through it to the upside, okay? And then if price turns around and gives me a market shift or break a structure back to the downside, I'm going to be looking for a pullback to a zone. So basically the market doing something like this. Let's just use our arrow line here. It breaks through this area structure, right? Okay. All right. Let's do it like this because I need to create the create a swing. Okay. So price breaks through it, pulls back, breaks higher. Okay. So if it breaks through this area of liquidity right here, pulls back, okay, pushes higher, and then turns back around to take out this or makes a market structure shift right here where it's breaking this area structure, I'm going to be looking for a pullback to some area of supply at this point, okay? To do what? Okay, let's mark this area as the area of supply, just referencing it as an example. I'm looking for a pullback to supply just to go back short, okay? So, liquidity is being taken out. We have equal highs here, all right? If it breaks through it, okay, then turns around, takes out structure back to the downside, I'm looking for a pullback to a key area of supply just to go short again, okay? So that's pretty much what I wanted to talk about today was pay attention to the overall market conditions. Pay attention because the market will show its hand, okay? And, you know, if you're someone that's, you know, new, a lot of you individuals probably know about smart money concepts and you know, how liquidity is, you know, interjected or liquidity is being formed or engineered within the market, whatever the case is, however you want to say it. You can look for those key areas like that. And as long as you're kind of trading with the flow of the market and prices taking out key areas of liquidity, especially where there's those bands of liquidity being formed in the market, price breaks through it, you've got to know who's doing that. It's the institution, it's the big boys, it's the banks. They're taking those areas out to fool traders, to give a false move, to basically take that area out just to stop traders out to move the market back in the same direction. In this case here, this could be a setup where they a play to where they want to stop traders out right here, where's liquidity at, just to turn the market back around and continue moving to the downside. So we'll see what happens, okay? We will definitely see what happens, but this is kind of the setup play which would actually happen on fold. So first, we want to identify if there's equal highs or equal lows. Well, first of all, you want to be able to see where, you know, and understand the overall direction of the market structure. What is it doing? Making higher highs or higher lows, or lower lows and lower highs, okay? Then look for those bands of liquidity, okay? Where there's either equal highs or equal lows. Price breaks through either one of those bands, especially if, say for instance, you're moving to the downside, okay? All right, and it's creating a band of liquidity above us, like right here, okay? All right, where there's equal highs at, it breaks through it. You know, you want to look for a breaker structure to the downside and then a pullback to a key area of supply. Reverse on the opposite side when we are moving, you know, to the upside, okay? Moving to the upside, and then it's making key areas or creating key areas of liquidity as it's making a, you know, basically moving to the downside, creating a major area of support where basically there's equal lows at, that's liquidity, okay? It breaks through it, turns back around, makes a market structure shift to the upside, pull back to carry demand, take your long entry. That's what I'm talking about. You have to be able to read and understand market structure. That means being able to understand what the powerful players in the market are trying to accomplish. I hope this resonates, and I hope a lot of individuals out there understand this key concept, because until you do, you may not be consistent in your trading. You may not be profitable. You may, you know, be able to trade supply and demand just looking at pullbacks to key areas, or pull back the zones where zones are untested. Like you see me trade each and every day. But you got to be able to understand the bigger picture at hand if you want to take and move with the market, move with the big boys. That's what I always talk about. You do not want to be like a defender to them. You want to be, playing on the same playing field with them and taking trades in the same direction in which they're taking trades in. Okay, so that's all I have for you guys really in this video here. Like I hope it helps tons of individuals out there. I hope it open up the eyes of so many traders out there, regardless what style of trade, regardless of what type of trader you are. If you trade futures or forex options, it doesn't really matter. It's the same thing that we see taking place in all the markets, and you just have to be able to read the market correctly and understand what's unfolding and taking place. Also, we have a great Discord community for anyone who's interested in joining our Discord. We are approaching, I think, about 900 members now, somewhere around there. So if you're interested in joining our Discord community, I will show you that right now. I'm going to pull it up here. This is our Discord community, and we have the trading floor. We have the general chat channel. The trading floor channel is where we as traders, futures traders, okay? Now this channel is geared and engineered for future traders, because that's what we discuss here on this channel. The trading floor channel on the Discord is for basically sharing your trades, taking screenshots of your trades and posting it out there for other individuals or other traders to see. It helps other individuals, aids them in their the grasp and understanding of, for those that are supply and demand traders, or if you have your own strategy, you trade, whatever the case is, being able to, so traders can be able to understand, why you took trades at certain locations or certain levels or zones or whatever the case is. But if you want to share your entries or trades here on the trading floor on the channel, you're more than welcome to do so, but you must please take a screenshot to post your entries here on the channel. The general chat side of things is more so for if you have questions and answers, or you just wanted to discuss general information surrounding the future markets or futures trading, or maybe you are a new trader that's interested in learning about the future markets and you have questions that you want to ask. Come to the general chat channel here on the server and ask away, okay? Someone will have the answer. If I don't answer or respond directly, someone will. Because we have like almost 900 members now, and there's going to be someone that has the answer, okay? And probably multiple individuals, all right? And a lot of discussion goes on this on the general chat side. But again, the trading floor is a great opportunity to air out and show your trades. Again, just please make a screenshot when you do make an entry or a trade, so that we can see the trade that you're actually taking, not just discussing, oh, I took a trade here. Please make a screenshot, okay? Because anyone can state that they took a trade and be falling behind someone else. But, we want people to be we want legit people. We want honest people. We want people to actually show individuals that they are actually engaging in the market and taking trades, all right? But that's all I have for you guys today. I appreciate you tuning in. If you have not subscribed to the channel, please take the time to subscribe down below by simply clicking on the red button, which says subscribe. Click on the bell, turn your post notifications on. Make sure you got your post notifications turned on so you never miss one of the uploads here on the channel. And please, hit that like button here today on this video here. I would definitely appreciate it. The group, the community here would appreciate it as well, because we want to continue to grow, and I will continue making great videos like this and be and sharing what I know, sharing information which I've been giving away for free in almost over 400 videos now. And you can also go and watch my live trading sessions here on the channel as well, because I have tons of those individual videos as well. But that's all I have for you guys. Now, look, if you're also interested in one of the tier membership, tiers, which is through the YouTube membership program, go over to the channel, click on the join button. There's 2 tiers, which you receive perks and rewards for your efforts and joining up or signing up for, basically for the price of a cup of coffee. Most individuals, I should say all individuals pretty much, who have signed up, they have signed up for to become an elite channel member, because what you do get is all the perks and rewards from the first tier, but you also receive the trade breakdowns. When I post a video discussing my trade entries, I go into detailed covered information about the trades pretty much. So what I'm thinking about, what leads me up to a trade, why I took that trade. I go into detail so that it helps individuals. It really does help individuals, especially those that are trying to understand supply and demand and trade the same way. As well as you get the playlist of videos, which I've hand selected from over 400 videos here on the channel that will pretty much put you in the position, or pretty much, I basically just narrow things down and handpick those videos so that you don't have to sit there and watch every single video on the channel if you're trying to understand how to trade supply and demand, or how I trade supply and demand, and maybe want to put your own twist on. But like I said, I've grouped a group of videos together that for your own benefit, that you can just kind of watch each one of those videos in sequence, or one after another, so you don't have to go in and watch every video. Okay, I'm finding out that it's helped a lot of individuals kind of fine tune the videos in which they need to watch. All right, but that's all I have for you guys. And again, for the price of a cup of coffee monthly, guys, $6.99 for the elite membership tier. Again, you get the trade breakdowns, the playlist of videos, member shout outs, which I need to really get back on and give those shout outs. And I'll probably do that in the next video, but I need to go ahead and do that because there's a ton of individuals who have signed up just recently. But I appreciate everyone's efforts on the channel. Okay, everyone's efforts. Everyone who subscribed, everyone who has joined as an elite channel member or a loyal channel member, thank you, okay? I appreciate it. I'll see you in the next video. Take care if you're trading. Please be safe in the markets. And I'm about to jump over into the Discord now so I can possibly try to take a few trades. Goodbye.